Maria and me are going to discuss Luxembourg today. Opening companies, registering companies, opening bank accounts in Luxembourg for individuals and corporations. The reason why we recommend Luxembourg are the reasons of reputation. Luxembourg enjoys a great reputation in the international market. It's a member of various international organizations such as OECD and financial and anti-money laundering associations that are fighting various and initiating various anti-money laundering initiatives and improving transparency. And many multinational companies, transnational companies are opening their subsidiaries and offices in Luxembourg. It's very popular. It's not part of any blacklists. So in terms of reputation, it's a highly attractive jurisdiction. Also, Luxembourg enjoys a very flexible corporate law system. So everything to do with registering a company, structuring it, introducing changes, liquidating, closing the company, everything is very fast. When we used to have clients coming to us to quickly close a company, actually they were lengthy periods of time that it used to take in the Russian jurisdiction. However, Luxembourg has no problem with this at all. Closing a company, liquidating a company, a full-fledged asset distribution, balance and everything takes only 2 weeks, only a fortnight. And so it was quite easy to plan and quite easy to execute. Luxembourg also recognizes re-domicile, so any company can elect to change to opt for Luxembourg residency and also re-domicile from Luxembourg to any other jurisdiction. For instance, some of our clients were asking questions about so-called Russian offshores, special economic administrative zones in Russia. It is possible, and if this is a Luxembourg company, it is possible to do. Also, Luxembourg is quite well known for its economic efficiency. There are a number of tax breaks. Companies do not pay corporate tax. All the taxation happens at the final beneficiary owner level. Luxembourg also doesn't have any requirements on economic presence to be actually present in Luxembourg. However, it is possible to execute. There are a huge number of offices in the corporate real estate market. You can rent an office, lease office space for one person, for instance. The services range from leasing a small office to finding big premises to relocate your team into Luxembourg. So companies in Luxembourg looking for staff are able to hire employees not only from Luxembourg, but from other EU countries. For instance, many of our colleagues commute from France and Germany, and so the labor market that you have access to is quite wide. Also, Luxembourg pays a lot of attention to protecting the interests of clients, and the legal system in Luxembourg in many situations is based on the rights of ownership, the rule of law. Now, please allow me to describe the type of companies we're going to discuss today. We're going to discuss the two key points. First is society, which is a joint stock society or LLC. So it will be a classic legal entity, classic company. Almost every jurisdiction on the planet offers similar concepts. Please allow me to explain why these two are used. One of the typical forms is a holding company. which owns subsidiary companies in other countries and receive income in the form of dividends or income from selling these subsidiaries when their value grows. There are participation exemptions. So if a Luxembourg company owns 10% of a subsidiary over 12 months, receives dividends, these dividends are actually tax-free. And similar to Russian participation exemption, it is well known that Russia enjoys quite a higher ownership cap, at least 50%. So Luxembourg does offer advantages in this respect. It is noteworthy that the taxation does have certain aspects to note, despite that Luxembourg remains a very attractive jurisdiction. I'll give you more details on that later. Now, regarding LLCs and JVs and JCs, we're speaking of private capital. These companies receive SPF status, so these SIFs are used by private individuals to hold their securities there and trade their assets. Due to this special status, the companies are exempt from corporate tax. However, the income from these assets is only leveled at the final owner, beneficiary owner level, or with the foreign companies if it's applicable, if they're connected to the beneficiary. Also, Luxembourg is highly attractive for innovative companies working in innovative sectors of the economy. Luxembourg enjoys only 17% VAT, which is important to note, and companies are also offered government tax breaks, government financing, access to funding. There are also breaks for licensing companies, certification companies. These are companies that work in the IP sphere, and intellectual property is not your classic case. To obtain this tax break, actually it's quite significant. Up to 80% of your profit is only taxed at 5%. Or exempt completely, and to take advantage of this tax break, it is important for the IP rights to be held by a Luxembourg company, not only on paper but also economically. So this has to be developed. This IP has to be developed by Luxembourg employees. So you do need economic presence, substance in this case. Actually, it is also noteworthy that back-to-back financing is available when a Luxembourg company receives a loan from its shareholders or another entity in the group and provides it to another one in a jurisdiction. Of course, we have to follow Luxembourg trends, international trends, and to obtain this type of financing, you need to prepare your transfer pricing documentation. You need to calculate the percentage to reduce the tax base in Luxembourg. Now, please allow me to explain why Luxembourg companies are used for that. This is one of the tax breaks is the lack of taxation for any interest paid out of Luxembourg. Another interesting form is a partnership, and usually these partnerships are used to create investment funds, regulated or non-regulated. These are UCIs, for instance, undertakings for collective investment. And I'd like to dwell on the tax rates. Personal income tax is 25%, 24.95 actually. Actually, this is corporate tax for companies over 200k plus euro. This tax rate is based from few various taxes. This is corporate income tax, and this is municipal tax. Depending on the town, for instance, Luxembourg has 6.7% tax, municipal tax, and another solidarity tax. So you have to basically account for around 25% in total for all of this tax rates. Now, let me describe SPF. This is a type of fund that's used to control corporate and family assets. They're usually used to control securities, receive passive income. Also, they may be used as a holding company to receive dividends from any operational businesses. And please let me tell you that the key tax break is zero corporate tax income tax in Luxembourg. But to take advantage of this tax break, the company has to abide by certain conditions. First of all, SPF companies are not able to conduct active commercial activity. So they cannot be used as trading companies, as you cannot use them for supplies. Also, they are prohibited from owning real estate and issuing loans for interest. They have to pay a certain subscription tax. This subscription tax is only 0.25% from the total company assets, or only with an 8-fold exceeding company's borrowing threshold. It is actually quite easily optimized if we structure the assets properly. So based on the asset structure of the company's assets, part of this is represented by the company's capital, and part of it is represented as debt to company owner. So on the slide you see this table. So usually with good structuring, you only need to pay 2.5k euro tax from 9 million euro assets. Also, double taxation avoidance agreements, various DTAs are used. In this case, we use alternative tax planning instruments. So speaking of the corporate details, SPF can be registered by trusts, funds, or individuals. It cannot be companies because the purpose is owning, managing personal or family capital. JSC, so collective stock society, is limited to 30k, individuals 12k. This is the threshold of entry. Capital is usually introduced in a form of property. For instance, if the beneficiary has some assets, a portfolio of securities, for instance, they can be used to institute a company for company capital. Now, speaking of investment funds, Luxembourg is actually the European center of investment activity. It's an investment hub. Many investment funds are located in Luxembourg. This is due to the fact that Luxembourg provides for huge choice of types and forms of tax residency based on your tax purposes, based on your investors, based on your projects. For instance, CCAR is used to invest into high risk, high profit assets, and for private individuals, usually we use MISIS type of funds, and UCITC type of funds. Also, non-regulated structures are quite attractive for our clients. They have to be audited by the regulator. They are quite free in conducting their financial activity and attracting capital. Now, let me give you more details on the non-regulated investment funds. Now, for the fund not to be strictly regulated in Luxembourg, the amount of assets under management should not exceed 100 million euro. with the condition that investments are funding the fund. So usually undertaking for collective investments is formed, they issue shares to collective partners, and then it's transferred to UCITC type of fund. And then the limit is 100 million euro.
If the fund attracts borrowed financing, alone this limit can be increased up to 500 million. So the foundation as a partnership consists of two types of partners. One is a management partner, and should be a Luxembourg company that is registered at a local financial regulator and which manages foundation's affairs or determines financial strategy, exit strategy, operational management. Management partner is responsible with all its assets, and therefore, for the purposes of creating management partner company, they use limited liability companies. Limited partners, their main goal is to receive income from a fund. It could be physical persons, trusts, or private companies, and not only from Luxembourg. So these funds are comfortable because they provide excessive flexibility on regulating investor relations. Any investment idea could be implemented, for example, including disproportional dividend distribution and investors allocation. So this slide shows the schematic that the fund invests in two projects, one related to commercial real estate and the other venture startup. So the fund attracts investors, a pool of projects, and investors want to invest in commercial real estate, and they issue special class shares, so-called Tkachenko shares, that give investors the right to receive income only from projects related to real estate. Or what's happening in venture startup is not related. They cannot claim this project and they are not participating. Similarly, investors can be attracted for startup that will not take part in any other projects, and that's within one legal entity. It can be implemented, and it's convenient because each investment idea, you don't need to create a special legal entity. It reduces time and costs. Another topic is changing double taxation treaty between Russia and Luxembourg. I think a lot of people already aware. Last year, Russia president set the goal to make taxation of income to Russia paid overseas, or make it more stricter, and they pay interest. So the tax should be withheld at Russia 5% or 20%. So in many cases, they use double taxation treaties, which include benefits. For dividends, rate can be reduced to 10, even 5%. And interest, in most cases, are relieved of taxation in Russia, subject to crisis events. Decision was made to work with most popular jurisdictions to receive incomes to change this double taxation treaty so that minimal income is 15%. And this jurisdiction became Luxembourg. So they had negotiations between two countries, and the agreement was made that the treaty changed and the rate changed. But in the beginning of the year, information was that Luxembourg didn't set legislation for it to come into effect. So it comes into effect in 2022, not 21. The only thing I want to warn about, two things. Looks good that benefits can be used a whole year, but there are two things that should be taken into account. First, the law enforcement practice in Russia limits the opportunity to use these benefits. In order to apply it, the foreign jurisdiction, in this case Luxembourg, the company that receives income in Russia should have significant substance, would be premises, employees. Moreover, it should have a real business goal. The company should have different real activities apart from passive income from Russia, dividends and interest. So it should be a real working company. And documentation of this company should confirm it. First of all, financial statements. If the Russian company pays to Luxembourg income using benefits with this treaty, should be a protection file so that not to dispute this. Unfortunately, most tax disputes are lost by taxpayers, and Russian companies have to pay extra taxes. And another thing, that this treaty will not become effective since Luxembourg didn't approve this legislation. It was initiative of the Russian president, and there will be serious attention to that in terms of legislation. And I think tax authorities will pay attention to these benefits and whether they are substantiated. Also, there is a possibility to use end-to-end approach if the company in Luxembourg or other jurisdiction doesn't have the economic substance, and these benefits can be used and these rates can be applied for them. In principle, that's what I wanted to say. I want to give the floor to my colleague Maria, and she will continue about changes in legislation in Luxembourg in 21 and banking information. Good afternoon, dear colleagues. Thanks, Petr. I'll tell you about these changes in taxation in Luxembourg in 2021. Good news is that there are very few changes, and they are selective in the second part of 2020. Luxembourg specified its position about changing taxes in 21 and said that in the pandemic year, it's not the best time to make these unpleasant surprises. So there will be very few changes and they will be very selective. I'd like to draw your attention to two items in these changes. First, quite significant for investors in Luxembourg real estate. Actually, the following change: incomes of regulated funds of Luxembourg, ZIFFER and RAIF, structured not as transparent partnership, will be taxed at 20% annual income of rent and sales, also indirect property located in Luxembourg. Also, amount of fees and taxes will be increased when contributing real estate in the capital of legal entities. And this fee is increased from 1.1% to 3.4%. And that's because Luxembourg real estate grows very fast and average 10% a year. In 2020, this growth was booming, was 15%, and that's the effort of the government to somehow slow down this growth, which is not desirable for Luxembourg, because the purpose of Luxembourg is to attract more high qualified employees It's very international atmosphere, many foreigners there, high prices for living, and that's a negative thing. The government tries to fight it. Second selective thing was optional income of company employees. Since 2017, they had this regulation when it was possible to optimize personal income of highly paid employees with optional income. And now this instrument has been removed. Also worth noting that from 1st of July 21, SPA cannot indirectly own real estate through participation in partnerships and foundations. It's not surprising. SPA law bans from the very ownership of real estate directly, although it's possible after correction of legislation to own companies that own real estate. But owning real estate through transparent partnership will not be possible from the 1st of July of this year. It also increased threshold of VAT exempt to 35,000 per year. The company should have revenues more than 35,000 euros per year related to VAT legislation in order to have the right to register and take European VAT for exemption. Regarding incorporation of the company in Luxembourg, I will briefly go over this slide. If you have any questions, please contact me and we'll respond. Regarding the process of incorporation, of course, it starts with compliance. It's not surprising. I think everybody is familiar with this aspect. Next, opening a bank account. Set up a company in Luxembourg is mostly related to a notary procedure. In order to incorporate the company, shareholders should come to the notary and register a company. Important aspect of this process is confirmation of the contribution to the charter capital. And this confirmation is usually a certificate which is obtained from the bank that opened an account for this company, which is not incorporated yet, and that received a charter capital to this account. So when we say how fast you can incorporate company in Luxembourg, if we go through the process, standard process, and open bank account first, then the whole process depends on the bank. On average, the time of opening bank account in Luxembourg bank, I would say in ideal case is 1 month. On average is 3 months. And next, depending on the client and case by case, this process can take 6 months, even longer. Therefore, the question of company set up through bank account opening could be delayed at the stage of bank account opening. It's important to understand that you can open a company not only contributing charter capital in monetary form, but also in non-monetary form. You can contribute assets, real estate, shares, bonds, other assets that you want to transfer. That way, if you go through contributing to charter capital with non-material assets, it's possible to reduce the time significantly. First, set up the company and then deal with opening bank account. After setting up a company, important stage is registration in a trade register and beneficiary register. Beneficiary register acts from 2019. However, this area is not transparent. The thing is that access to a beneficiary register is public, open. Actually, anyone knowing the company can enter this register and find out who is the company beneficiary. If the beneficiary didn't use this opportunity of legislation and didn't close this information. Closing this information is possible having the foundations like that. Disclosing this information would endanger life of beneficiaries, because this definition is very subjective. If it is substantiated with documents or court judgments or other documents, then it's resolved and the information will be closed. But if in your case the arguments are more based on broad notions like country risk, emotional issues, then these arguments are mostly not accepted, and only in a year after these arguments were submitted in 2020 from the second half, in a year after filing, we start getting for our clients, they didn't have some negative decisions and denials from beneficiary register administration. However, most of these clients went to court. Well, disagreement, but the courts are not considering these issues now because it went to the level of European Union. What should be considered substantial basis or not substantial? And according to lawyers on the market, Luxembourg will not get response this year on this issue, and the information will keep closed, and everybody is waiting what European Court would say. Important thing that legislation about the register, beneficiary register, is contradicting private data protection legislation, and this fact is well known in EU, and this tells that in the near future there won't be decision, information will be kept closed. For those who went to court. And the last topic, bank accounts for non-resident beneficiaries. Whether it's complicated or not to open a bank account in Luxembourg. When I answer this question, I start looking at the roots of the issue. And this issue comes from the fact that banks have significant compliance function, and in order to perform it, this compliance function is mostly related to non-resident beneficiaries, where compliance risks are higher and local control companies and individuals. So those expenses of banks that the banks have to incur, they should be somehow compensated by incomes. Otherwise, these customers are not beneficial. They would spend more time on them and get income. So question whether a bank account can be opened or not, if compliance enables it and the bank would accept the client and its reputation is good enough. So the question is that we are looking for those areas where the bank can make money. If the bank find this area, then the account will be open. If not, an account won't be open. Most popular and universal way to interest bank is a private bank, and where you can become a client as a physical person or SPF or unregulated fund, and you can become bank customer not only with Luxembourg company, only with BVI, not in all banks, but in many of them.
And of course, it will be clear that private banking will be able to work with you as long as you have enough assets for this to be economically viable. On the table, on the screen, you see the breakup of information for individuals. This is the only way to be able to begin working is to be a private banking client. Legal companies, legal entities, non-residents, these are the bonuses that private banking offers their valued clients. So if you're just a private person, you have a portfolio, now you can also open an account in Luxembourg, the level of company level, case-by-case basis, but most often you will be able to open this account. Everyone will support you in terms of that. The entry threshold is 400k plus euro for low-risk clients. Some Russian clients have also passed this low-risk threshold. More high-risk clients begin with 500k, €500,000 for the banks to begin looking at them. Also, a 1.5 million portfolio holders will be able to receive permanent residency status in Luxembourg if they're interested in that. This is also another option. High-tech, other trading companies, minimum bank account balance. The banks like to see is at least 500,000 euro. For this to be viable for the bank. Otherwise, a company should have significant substance in Luxembourg, straightforward structure, and obvious links and ties to Luxembourg. So if they ask a question, when I want to register a licensing company, create a substance, at least one person for 1 hour per week, one FTE, one part-time employee for 1 hour per week, and open a bank account, most often banks won't go for that. They will need an office, a few employees, and as long as they see the company is actually doing business in Luxembourg, you will not have any problems. Now, as to do with non-regulated funds, the SPF opposed to SPF, this is quite a straightforward structure. The bank has to understand the investors, the structure, and of course you need to also find avenues for cooperation where the bank can find viability. This can be, for instance, private banking with investors that you bring into your fund and are also private banking clients of the bank. This may be cooperation on mortgages, for instance, work via mortgages if you're investing into real estate, and as long as the bank finds a viable area for collaboration, they will definitely open an account. That's all for me briefly.